Hey everyone, and welcome back to the channel. Today we're diving deep into a topic that affects every single one of us, our money. But we're not just talking about earning more. We're talking about the silent thief that's robbing you of your financial future. What is it? Distraction. Think about it. We live in the most distracting time in human history. Every ping, every notification, every new shiny object is designed to pull your attention away from what truly matters. And when it comes to your finances, these distractions can be absolutely devastating. You set a goal to save, but then you see a targeted ad for a vacation you desperately need. You plan to invest, but you get caught up in a hot, speculative trend that everyone's talking about, only to see it crash. You decide to pay down debt, but social media convinces you that you need the latest gadget to keep up. Each of these is a distraction, pulling you off the path to financial freedom. Success in finance isn't about one big lucky break. It's about consistent, focused action. It's about saying no to 1,000 little things so you can say yes to the one big thing that matters, your long-term security. So, how do we fight back? How do we conquer these distractions and finally take control of our money? That's what we're going to break down today. I'm going to share some powerful, practical, personal finance tips that will help you tune out the noise and focus on building real, lasting wealth. This isn't about deprivation. It's about intentionality. It's about designing a life where your money works for you, not against you. Let's start with the absolute foundation, the budget. I know, the word budget can sound restrictive, even boring, but I want you to reframe it. A budget isn't a cage, it's a roadmap. It's you telling your money exactly where to go instead of wondering where it all went at the end of the month. The biggest distraction here is complexity. People download fancy apps, create massive spreadsheets with dozens of categories, and then burn out after a week. Forget that. Let's simplify. I'm a huge fan of the 50-30-20 rule, especially for beginners. It's simple and effective. 50% of your after-tax income goes to your needs. This is the stuff you absolutely have to pay for. Rent or mortgage, utilities, groceries, transportation, and insurance. Non-negotiable. Then, 30% goes to your wants. This is the fun stuff. Dining out, entertainment, hobbies, shopping for non-essentials. This is where you have flexibility. Finally, and this is the most important part, 20% goes to savings and debt repayment. This is your future fund. This 20% is you paying your future self first. The key is to automate this process. Set up automatic transfers from your checking account on payday. One transfer goes to a high-yield savings account for your emergency fund. Another goes to your retirement account. Another goes toward your high-interest debt. By automating it, you remove the daily distraction of deciding whether to save or spend. The decision is already made. The money's out of sight, out of mind, and working hard for your future. This single habit is probably the most powerful way to defeat financial distraction. You're no longer relying on willpower. You're relying on a system. Now, let's talk about debt, specifically high-interest debt, like credit cards. This is a 5-alarm fire for your finances. Interest rates are so high that they act like a financial treadmill. You're running hard making payments, but you're not getting anywhere. The distraction here is the minimum payment. Your credit card statement practically screams, just pay this small amount and everything will be fine. It's a trap. Paying only the minimum can keep you in debt for decades and cost you thousands, even tens of thousands, in interest. To fight this, you need a focused plan. There are two popular methods, the debt snowball and the debt avalanche. With the snowball method, you list your debts from the smallest balance to the largest. You make minimum payments on all of them, except for the smallest one, which you attack with every extra dollar you can find. Once that smallest debt is gone, you feel a huge psychological win. You then take all the money you were paying on that debt and roll it over to the next smallest one. The momentum builds like a snowball rolling downhill. The debt avalanche method is mathematically faster. You list your debts by interest rate, from highest to lowest. You make minimum payments on all but the one with the highest interest rate. You throw all your extra cash at that one. Once it's gone, you move to the one with the next highest rate. This method saves you the most money and interest over time. Which one is better? It's the one you'll actually stick with? If you need those quick wins to stay motivated, go for the snowball. If you're purely driven by the numbers, the avalanche is for you. The point is to pick one, focus, and ignore the distraction of the minimum payment trap. Okay, we've covered budgeting and debt. Now for the exciting part, making your money grow. We're talking about investing. The biggest distraction in the investing world is noise. The 24/7 news cycle, the hot stock tips from your cousin, the panic when the market dips, the greed when it soars. All of this noise is designed to make you do one thing: react emotionally. And emotional investing is a recipe for disaster. It causes you to buy high out of FOMO and sell low out of fear. The antidote to this noise is a simple, boring, and incredibly effective strategy: long-term, diversified, low-cost index fund investing. Let me break that down. Low-cost index funds are investment funds that hold a little bit of everything in a particular market, like the S&P 500, which holds the 500 largest companies in the US. Instead of trying to pick the one winning company, you're betting on the entire market to grow over time, which historically it has. The strategy is called dollar cost averaging. It means you invest a fixed amount of money at regular intervals, say $200 every month, no matter what the market is doing. When the market is high, your $200 buys fewer shares. When the market is low, your same $200 buys more shares. Over time, this smooths out the bumps and lowers your average cost per share. It takes all the emotion and guesswork out of it. You're not trying to time the market. You're just spending time in the market. This is how real wealth is built slowly, steadily, and by ignoring the distracting noise that causes others to stumble. Set up your automatic investments and then go live your life. Don't check your portfolio every day. That's another distraction. Check it once or twice a year to make sure your asset allocation is still on track, and that's it. Let's touch on one more critical area where distraction can cost you a fortune: your mindset and your goals. It's easy to get distracted by what other people are doing. You see friends on social media buying new cars, luxury bags, or going on lavish trips. This creates an illusion of wealth and can trigger feelings of inadequacy or envy. It makes you question your own journey and tempts you to spend money you don't have to keep up appearances. This is the keeping up with the Joneses distraction on steroids. You have to get crystal clear on your own. Why? Why are you saving? Why are you investing? It's not just about numbers on a screen. Is it to retire early and travel the world? Is it to buy a home and provide a stable environment for your family? Is it to have the freedom to quit a job you hate and start your own business? Write this down. Make it specific. Make it emotional. Put it somewhere you can see it every day: on your bathroom mirror, on your computer desktop, as your phone's lock screen. This powerful why becomes your North Star. When you're tempted to make an impulse purchase, you can look at your goal and ask, does this purchase get me closer to my North Star, or does it pull me further away? This simple question can cut through the fog of marketing and social pressure. It refocuses your attention on what is truly important to you, not what society tells you should be important. Your financial journey is yours alone. It has its own timeline and its own finish line. Stop comparing your Chapter 1 to someone else's Chapter 20. Run your own race. So, to recap, the path to financial success is a battle against distraction. First, create a simple, automated budget like the 50-30-20ths rule to tell your money where to go. Pay your future self first. Second, attack your high-interest debt with a focused plan like the snowball or avalanche method. Ignore the minimum payment trap. Third, build long-term wealth by investing consistently in low-cost index funds. Automate it and ignore the market noise. And finally, define your powerful why. Let your personal goals, not social pressure, guide your financial decisions. Each of these steps requires focus and discipline, but the reward is immense. It's the peace of mind that comes from knowing you're in control. It's the freedom to make choices based on your values, not your bank balance. It's the security of knowing you've built a strong foundation for yourself and your loved ones. Distraction is the enemy, but focus is your superpower. Start small, stay consistent, and you will be amazed at what you can achieve. Thank you so much for watching today. If you found this helpful, please hit that like button and subscribe for more content on mastering your money and your life. Let me know in the comments which distraction you struggle with the most, and let's support each other. See you in the next video.